My name is Chris Wetherbee. I'm the Senior Transportation Analyst at Wells Fargo Equity Research. I've been covering transportation for 20 years. Operating expenses continue to be fairly inflationary across freight, and that's driven by labor as well as a whole host of other inputs into the business models of the companies that I cover. So we're really looking for companies to try to generate productivity where they have the opportunity. And we do see AI as driving the potential for some pretty decent productivity gains across the transportation landscape. And I think that could be quite compelling across our space, particularly in the railroad space, as well as maybe the freight brokerage side. Both of those seem to be well positioned to implement new technologies to drive productivity with the workforce. Every year is a little bit different in terms of what we hear from our companies, and you'd expect that in the context of transportation, which is a very cyclical industry. We've bottomed from a cycle perspective, and if anything, we might be actually bouncing a little bit off the bottom. We've taken some of the concern about the risks of tariff off the table, and it does appear that the overall demand environment's a bit more stable than maybe some people had been expecting. So I think that's a bit of a different tone that we've heard from our companies relative to the last couple of years where there's been a multi-year normalization post the COVID boom.